Hello and a wonderful good day from sunny Frankfurt. This is Helava. My name is Thomas Kors. I'm in charge of financial institutions at this wonderful bank, and I have with me again my colleague Matthias Melms.
Hi Thomas.
Who is in charge of syndicate and DCM for financial institutions and SSA borrowers. What we're doing here is we try to give you another update, as we have done so in January. There have been another 2 months very interesting types of developments. We have yet again another TLTRO. We have yet again not enough covered bonds, and obviously yet again more and more SSA bonds. But before we go into these details, I'd like to point your attention to the charts that Matthias has brought with us and invite you, Matze, to give us some comments about the developments of the last 2 months.
Yeah, as you can see, we have two developments that are really obvious. The first one is we have extremely low issuance volume in covered bond compared to the years before. With only 23 billion in covered bond issuance activity from January to March, we have nearly half of the issuance volume of the Q1 in 2020 and only 1/3 of the issuance volume of 2019. And that has an obvious reason.
Which is?
Which is? The answer is always the same in the last years.
The ECB.
ECB, exactly. They are responsible for that. Why that? The ECB has offered the Eurozone banks another round of TLTRO program, and with TLTRO 3.7, banks have asked for funding of 330 billion euros.
Is that a lot more than last time?
It is the second highest volume under the TLTRO 3 program. We have had the highest volume in June last year, and with 1.3 trillion euro. It is obvious less, but this 330 billion euro draw away issuance activity from the market.
Okay, to the extent that we now only have, what, a quarter of what we normally have, or half?
We only have half of what we have had last year. We only have a third of what we have had the year before last year.
Okay, so my wishful thinking, it would be twice as much. Okay, and have we seen any special developments in the structure of those bonds in terms of maturity preferences or regional specialties?
Yeah, we have had
growth in the family, right?
We have had, for one, we have had, of course, growth in the family. We have seen new issuers coming to the market from the Czech Republic, from South Korea, but even in Germany, we have seen a new issuer in the sub-benchmark segment. But we have also seen another development. Due to the low interest rate environment, investors have had more close look to the long end of the curve, where it was possible with the one or the other issuance to get a positive yield. And especially these deals had attracted the demand from investors. And the issuers have reacted on that and offered especially yields that were slightly positive. And with the latest development in the yield environment with 10-year swap yield around flat, it is now again possible to have also deals with a positive yield, not only longer than 10 year, but with 10 year.
Yeah, for a while, people were screaming for 50 and 100-year bonds, if I remember correctly.
Exactly.
And now you can get positive yields even for covereds at around 10 years, right?
Again. Exactly.
Let's see how long. If I have my screens right in front of me, today was already looking a little bit shaky around that.
Today it was flat. The days before we have had some positive basis points in the yield at the 10-year. But
so what do you think? Is the trend further up on the yields, or are we going to stay where we are right now?
So it will depend on the development of the corona pandemic. And my view is, as soon as it is foreseeable that we get to the end of the pandemic with enough vaccines in the market, and what we hopefully have in Q2, we will see rising demand in economy, and we expect the growth in the GDP, and for that we will have inflation. And as soon as we have the discussion about tapering, I'm pretty sure we will see an increase in yields.
Okay. So as soon as every shop is open again, as soon as we can travel again, we're on the road and spend some money, right?
Hopefully.
In the meantime, however, it seems that the governments need to be spending money. And that's probably best reflected not in senior pref, not in senior non-pref, obviously. Prefs are considered very close to covers anyway. Senior pref was going pretty nicely over recent years anyway. No big changes apparently, but the big change has been in the SSA segment, right?
Exactly. Year to date, we have seen issuance activity, issuance volume of around 130 billion, and it's a plus of 30% versus the year before, and even a plus of nearly 50% versus 2019. And there's also a special reason.
Which is?
Which is not the ECB.
But it starts with an E. It starts with an E.
It starts with an E, exactly. The EU SURE program is in the market, and as you know, the EU SURE program refinance unemployment in the European Union, and with an issuance volume of close to 40 billion, the EU SURE program stands for around 35% of the issuance activity in the SSA segment this year. And with the other E name, with the European Investment Bank, where we have seen issuance volume of around 13 billion, both E names together alone stand for 50 billion.
And that's only the beginning, I understand, because the SURE program is one thing, but this new Europe financing program that's
Next Gen EU, exactly.
That's going to be much bigger, right?
Exactly. We're talking about around 700 billion in issuance activity coming to the market in the next years, and that will be a very big thing.
But it doesn't seem to have the effect on the rest of the SSA market that a lot of people were fearing. I remember a lot of people said, look, you need to get all these other bonds away, because once the EU comes out, they're going to be so attractive that all the others will look terrible in terms of performance, because there the spreads will have to rise. That hasn't really happened, has it? I mean, the EU started out cheap, well, rather attractive, and now it has become expensive. It's becoming more expensive. So the convergence goes down, not up, right?
Exactly. There's no convergence to the upside. But what we observe is that with every new EU SURE bond, we have less spread on it. And on the other hand, we have all the other SSA stuff in the market, obviously bonds like lender bonds, and there's still demand for that type of things.
You mentioned lender bonds. So how come that we get 100 billion and plus orders for a quarter of that in issuance volume for an EU bond, where everybody knows there will be lots and lots of more bonds issued, and we don't see the same development in lender bonds, or do we?
No, we don't see the same development in lender. What we can say about the EU, it is the different demands that we have in lender, where you have especially demand from investors outside the Eurozone for the new EU SURE program, and I'm pretty convinced also for Next Gen EU, because we have a AAA alternative in the Eurozone besides bonds and smaller government bonds. But we have here with the SURE program a very liquid market now in the SURE bonds that we haven't had only in the EU bonds before, in the years we have seen. So, and that explains a little bit the difference to the lender bonds. The lender bonds are small bonds in comparison to the SURE program. You have a lot of local demand, but you don't have so much demand from investors outside the Eurozone. And exactly that explains the difference in the demand structure.
And some lender bonds perform very well and others not quite so well.
Exactly, because when you analyze the different issuance that we have seen this year, there were some issuance that were really tight, and it was really difficult to find enough demand on this tight level.
But is this driven by market situation or by the issuer? Because it's not always the same issuers that are successful or not successful, right? This seems to change. And you have even on the same day, one issuer going great and the other not so great.
Yeah. You have to distinguish between the different lenders. You have different issuance strategies. It depends a little bit how much you have to do in types of issuance volume. And
for strategy, I have a great idea. You mentioned the EIB as well. You know, the EIB came up with
exactly.
the climate awareness bond specifically targeted to the likes of us, to savings banks and Landesbanks. Did rather nicely. First time I've seen savings banks actually in bulge buying that type of bond, even though it wasn't the cheapest, was exactly on the curve. And that's where I would like to take the hint. The EU SURE bonds, they finance unemployment or rather measures against that, correct? So they're social by nature. So why don't they call them social bonds? That would make them ESG, sort of green in the wider context. Maybe that would help. There's a hint for you, European Union. Maybe you want to try that. I think we're out of time here. Matze,
unfortunately.
it's been great with you again. Thanks a lot.
What a pleasure, Thomas.
We do this again sometime soon, I hope. And I hope that most of you will tune in again when we try to give you the latest update for what's happening in the high-grade financial markets in Europe. Thank you very much.
Thank you very much.